My name is Jame DiBiasio, and I run DigFin, which is part of AMTD Digital. I'm based in Hong Kong, but covering the region. It's exciting for me to be part of a wealth tech event. I've been part of the wealth tech committee in my days at the FinTech Association of Hong Kong, and also just in my previous life, did a lot of reporting and writing about asset management in general. And what's happening is really cool. There's just so much stuff going on. And we are going to go through a tour of the highlights to give you a sense of the enormous change and opportunity in asset and wealth management and wealth tech. And we've got three speakers that are going to help us do that. And first, so let me just lay out the way that we've decided to structure our discussion. The discussion is not scripted, but rather we've just simply tried to come up with a framework to deliver what we think will be interesting and helpful to you. That is around four things. We want to look at what's happening, not just in Hong Kong, but around the region. We want to look at the platforms, the way that businesses in wealth tech are being organized or reorganized. We want to look at distribution, how products, investments, strategies are getting into the hands of consumers in ways that are new. And finally, we want to understand, what are these products that we're talking about? What is it that we're trying to push through these pipes? And finally, we'll wrap it up to understand some of the implications this has for doing wealth tech business in the Greater Bay Area, linking Hong Kong, Macau, and the major cities of Guangdong. So to help us with this today, let me very briefly introduce our three speakers. We've got Eric Niosewe. Eric is joining us from Singapore, so a big friendly virtual welcome to our guest. Eric is, he's had a variety of roles in his background. He's currently member of the board at RF International Holdings, a venture company. Helen Leung, who is at Mercer Investments, where she is head of the FundWatchTM solutions team. And finally, Kai Mak, who is head of wealth management at WeLab Bank, one of the 8 virtual banks licensed in Hong Kong. So welcome to Kai, Helen, and Eric. Now, as I said, we want to start with platforms, what we want to call these, I guess, the organizations of today and tomorrow that are creating businesses in this space. Eric, from your perch in Singapore, you're looking at a variety of things to invest in. You've been affiliated with various wealth tech businesses. What are you seeing in terms of what's happening with the rise of, whether it's virtual banks or mobile brokerages, whatever it might be? Tell us what you see going on that's happening right now.
Great. Thanks, Jay. Hi, everyone. My name is Eric. Okay, so what I've seen in the last, I would say, 24 months in relation to the GBA area is the what do you call the surge of cross-border kind of platforms, right? So, case example, in the recent times, you have a Singapore fintech firm called Stashaway that has launched into Hong Kong. Right, Stashaway, basically it's a robo-advisory platform that targets individuals or high net worth for stocks investing. Right, that doesn't have the time to look at stocks every day on the screen. And then further back, you have a digital securities exchange, ADDX, right, that became quite synonymous, and they also back in September 2021 received a $200 million allocation, which is under the QDLP scheme. Basically, it's essentially allowing China investors to basically invest offshore onto ADDX platform that basically has digitized products or tokenized products in terms of whether is it bonds, hedge funds, structured products and stuff like that. So from a platform perspective, I do see that number one, it is promulgating cross-border. 2, it's ranging from exchange platforms, particularly digital securities exchanges, not about crypto exchanges, but more to say licensed, regulated digital exchanges, as well as robo-advisory platforms, like I mentioned, Stashaway. And there's many others that is already, whether it's from Hong Kong into Singapore or vice versa, Last but not least, it's basically your digital banks. It hasn't been that prevalent yet for most parts of the wealth industry, but going back to the notion of digital platforms, I think securities exchanges or digital security exchanges is becoming quite synonymous. Think about the tokenization of investment products, where we used to not be able to look at bonds in a different way, but now it's basically accessible from a digital standpoint. All right, over to you, Jay.
There's a couple things there that themes I'm getting from your comments, Eric. One is around access to new types of asset classes, private
Correct.
markets, for example, or private equity. And another is using technology to transform the securities or the investments themselves.
Correct. I mean, the recent news, if you read, ADDX has launched or listed digital securities in a form where you have KKRs coming in. You have the likes of potentially BlackRock and stuff like that. Big names that we don't usually, or even high net worth usually, don't really have an accessibility. But now, with the digital securities platforms, whether it's inbound or outbound, or think of it as a distribution, it is now democratizing the access to these hard to access products.
Right. I want to get some of the others to talk about this issue around what you see. Helen, is this concur with what you also see going on? These themes around access, these themes around new digital forms of old types of investing, and is there anything else that you see that Eric didn't cover?
No, I think Eric bring up a very key trends we're seeing in the markets, that the digitalizations and the digital capabilities are no doubt a very important driver and differentiators for companies to grow the business in the market within this financial services and the GBA. So we continue to see the digital capabilities have been playing a very key role across the business models, propositions, relationships with clients and the business partners, even over the 2 years pandemic that actually speed up all this development. So we see these platforms across different asset classes or different subsectors within the financial service providers. They've been using it to transform the business dynamically and speed up things, benefiting from all the good things like scale up, lower cost, productivity. And I think the important thing is the interactions with the clients. So this is very consistent with what we see.
And just on that point, Helen, that interaction with clients, that last point you made, are the biggest changes happening in the retail direct-to-consumer space, or is it happening in the access to, let's say, the high end of retail, the high net worth segment, or institutional, or all the above?
Yeah, I think this is just happening across different segments. Take our business, for example. Our business was launched, Mercer FundWatch was launched back in 2019 as a fintech proposition to deliver Mercer proprietary fund ratings, publicly available in Hong Kong and Singapore. So the digital platform enables many users like individual investors, financial advisors, wealth management and fund distribution platforms to access these fund ratings, our investment insights very conveniently. So it helps our growth. The number of asset managers sign up for these rating services and the user of these services has been growing across the years. And it also helps us to expand our business, to roll out into new markets like this year we plan to roll out in Thailand, Taiwan, and potentially to make the fund rating available for GBA WealthConnect eligible investors. So we see the key trends like what Eric said.
I think the story there, based on your example, and there's others doing this, is what we're seeing is services that used to be exclusive to large institutional investors, sovereign wealth funds and pension funds, are now being made available further down the pyramid scheme of client types, first to high net worth, and then also even down to the retail level. Would you agree with that?
Yeah, exactly. Yeah.
Okay, and that's a powerful change. Kai, you work at WeLab Bank, virtual bank, and Eric had mentioned the rise of virtual banks. He thought it was kind of early yet, but obviously you guys have taken the initiative in your own business to try to be relevant in the wealth space. Tell us what you see going on in terms of the way that new platforms and models are appearing.
Yeah, good morning. Good afternoon, everyone. Good afternoon, Jame. I think I just want to first echo with all my panel speakers that a lot of things actually are now going on in the market, especially in the digital wealth space. And I think the current development of digital wealth is very interesting. And I'm pretty sure it will become even more interesting actually in the next 1 to 2 years. What's happening is over the past few years, the adoption of digital banking has grown rapidly, thanks to better mobile services by traditional banks and the rise of virtual banks. And COVID plays an important role to drive the user adoption. And nowadays, mobile channel has become a default channel for lots of Hong Kong people for accessing the general banking service. And amid this backdrop, the natural extension is to expand from general banking services into wealth management service. And currently, I think for a lot of traditional players, all the big banks, they still use relationship manager and branch sales model. These are still the core of their business model. And on the digital side, they mainly use that channel to provide execution service for some simple financial instruments like stocks or mutual funds. But on the other hand, for all the new players like virtual bank, including ourselves and other mobile advisor, we're getting ready to offer new service to the market. And a number of virtual banks are in the preparation stage of providing wealth service. And at WeLab Bank, actually, we are prepared for more than 2 years. And now we are in the final stage of launching a brand new digital wealth advisory service to the mass market. And at the same time as...
Yeah, I want to talk about that, but I want to talk about that when we get to the product part of the conversation, guys. So I'm going to save that because I think that's very interesting, and we definitely want to spend a little more time on that. The next big topic I want to talk about is distribution. How do these new platforms get their products in the hands of actual investors? Helen, can you give us a sense of what you see happening in this space?
Sure. So there are a few areas we observe. I think we shared in the earlier dialogues that the digitalization of fintech or virtual meetings like fundamentally reshape the interactions between the customers and the wealth management services providers. Mm-hmm. So I think this is no doubt. However, they cannot totally replace the face-to-face and physical meetings. The other thing we see is the increased automation at the platform in the distribution side that helps to make the process, the efficiency, and also the overall speed and the user experience. We see well-established firms not only adding more resources in technology, but also to partner externally with successful fintech services provider. So they just want to have a stronger digital capabilities. And then we also have our panel speakers mention the rise in discount brokers, passive investing strategies, automated investment strategies are also rising trends. Mm-hmm. And also the robo advisors, we see the growing AUM, the use of AI, machine learning, big data to analyze client behavior, investment appetite. These are all happening. And using the innovations to sell investment products. And I want to add a little bit more about the data point. Well, in the past, we may use traditional data like collecting customer demographics information to help us customize investment solutions or wealth management services. But then with the technology, enable us to collect this data generated continuously from each customer touch point. And this is really a big change. and help facilitates matching the needs of the customer with personalized solutions. And also, furthermore, some strong technology platform may also be able to understand the intention of the customers, to understand how they make the decisions. So these are all very powerful, we were seeing.
Yeah, so it seems on the one hand, we've got these new ways, we have new platforms, we have more, I think, sophisticated means of distribution in the sense that the RMs can better understand the clients, and they have perhaps different ways to service them using technology, get those sorts of insights. And you can be more efficient as well, the whole back end that you alluded to, Helen, in terms so that maybe you need fewer RMs to handle the same number of customers, or with the same number of RMs, you can scale up your customer base. But at the same time, from your comments, I gather that both in terms of helping the RMs and also, I guess, giving them even more sophisticated insight into the customer, the role of, in this case, we're assuming a bank, whether it's a private bank or retail bank, is still key. That's, I think, implied in your comments. Do you see the role of distributors spreading beyond the classic banks that have always dominated the sale of, say, mutual funds in this region?
Yeah, could be, yeah.
And what would that look like? What are there alternative distribution channels that are actually here and operating, or is it still kind of theoretical?
Well, we see the distributions of products or services no longer restricted to really the traditional banks. It could be different types of platforms. The traditional business might not be just banking. So this is really blurring the differences of the business models.
Yeah, okay, great. And just would love to get the others to jump in with their comments here. Eric, anything on distribution that you think we haven't covered?
Yes, I think particularly in Hong Kong or GBA, OSL, I think it's based in Hong Kong. I mean, fantastic firm. They have grown, year on year. And I think the recent times they have partnered now with Interactive Brokers for its crypto services. And now, what may happen is that once, obviously, if OSL starts to, or if they have already taken on digital securities, then the distribution platforms now no longer sits with the bank, right? The bank could actually structure products and list it on OSL, for example, and distributes from there, right? And what I like about these platforms is that, I mean, I'm an account holder of ADDX, and what I like about these platforms is that you and I don't really have time to sit behind the screens to invest in stuff. But what is useful is that it prompts me whenever there's a new product, there's a new listing. And it's so easy to now with an iPhone or a mobile phone, you have face recognition, you look at it, it logs you in, and a whole wealth of information is in there. But what I find it's very useful is when we talk about RMs, is when you want to have deeper information that's not available on the platform, where you want to have a more insightful discussion to say, who are the founders, what's the company about, or when it comes to private equity. So the RMs actually come in very handy. Just touching a bit about Helen's mention about data. I also noticed that most of increasingly wealth investors are looking at ESG stuff. So in Singapore, there's a company called Stacks, S-T-A-C-S. They recently launched a ESGpedia, which means that all listed firms or SMEs who are pursuing ESG stuff, it's all listed there in terms of their ratings and stuff like that. So I thought that sort of information could be very nicely plugged into, Mercer, even on the fund level, where if it's a fund and it has some ESG elements, it can be, intertwined or enhanced data that goes into a platform.
Well, then you guys are going to have a coffee after this.
Yeah.
Sure.
And just staying on the distribution topic one more time, but thanks for those insights, Eric, is Kai, obviously WeLab Bank is, well, it's a bank, but it's a new bank, digital only. How do you approach the concept of distribution? What does that mean to you that might be different than if I walked into HSBC or Standard Chartered?
Yeah, this is a great question. I think we will all agree that digital now become a necessary channel, and actually given all the behavioral changes in different parts of our daily lives, digital trend has become inevitable. And I think digital doesn't only mean going online. It means better services like access to the service anytime, anywhere. It means more streamlined transaction process and more user-friendly experience. And to us, it means actually less pressure from salespeople to push any product and less bias in product recommendation. And also it means more transparency in terms of investment information and fee structure, et cetera, et cetera. And more important, I think digital to us also means we can provide the wealth solution to serve along the end-to-end investment journey with our user. While most relationship managers mainly focus on selling product at the point of sales, and digital, I think, is a great tool to continuously engage users and keep track of investment progress, for example, for our user. So it's ongoing in nature.
Right. And again, it's back to that, something that a private bank traditionally would have been able to provide only to its wealthiest customers. Now you can provide at least a basic version of that kind of dialogue to anybody.
Yes, correct. Yeah. After all, I think investment is not just about the financial product itself. More importantly, it's about advisory service, about the whole investment journey.
Yes. Okay, great. So while I'm with you, Kai, we want to now talk about product. I promised I'd ask you about some of the products that you guys are imagining up in your lab with your partner at Allianz. And happy to hear what you have to say about that. And in particular, though, my interest in this is how is digital changing the way that products are created and conceived? What is the nature of these products today that might be a little bit different than what we would have had a couple of years ago?
Yes, thanks for the question. Before I talk about more how we approach the problem digitally, I would like to step back a little bit to talk about what kind of services actually are being offered in the market by those traditional banks. And it's very interesting, actually, over the past 1 to 2 years, we observed that a lot of big banks are pretty aggressive in offering digital wealth service. And while RM and branch sales model is still the major channel for them to provide advisory service to premium segment, as you just mentioned, they try to use digital channel to tap into the younger and mass customer segment. And they spend lots of resources on rebranding as well as investor education. I think it is a good news and important driver of more widespread usage and adoption of digital wealth. But however, the digital channel still mostly focus on stock and single fund product, and it is an execution only trading platform to them. And these actually provide lots of room for other new digital players to offer differentiating services. For example, some of the existing mobile advisor in the market offer model portfolios, which in my personal view are definitely a better investment solution compared with single fund for diversification purposes as well as for long-term discipline investing. But if you ask me, I think we should push the boundary further to really change the market practice of sales-driven and product-driven sales model to a truly digital advisory service. And our approach is more like we try to add more value-added digital advisory services to serve our client along the entire end-to-end investment journey. And secondly, what I can foresee will happen actually in the next couple of years is, in addition to some simple product like mutual fund, model portfolio, or stock, probably we will see more broader range of products to be available digitally. And more importantly, probably we can try to integrate them together. We should treat all the stocks, fund, and other financial products on a more holistic manner instead of on a more silo basis. And on top of that, as a virtual bank, we try to integrate our banking services with wealth services and actually with advisory elements.
People in Asia have been talking about trying to create an advisory or advice-driven fee model rather than a product-based model in selling, at least mutual funds or stocks. And it hasn't really worked as long as you're dealing with the banks as your main channel. And in the West, in places like the United States, the UK, Canada, the advisory-driven model that's dominant is often more about tax than it is about the products themselves. So what has to happen for this to actually work now? I mean, is it just about putting more products together in a cheap, efficient way, or is there something else that has to happen so that you can actually get people to pay you for advice?
I think speaking about the fee structure, we approach the problem, I think, more from the user perspective, what the user preference really is. I think in Hong Kong or Asian market, I think most of the investors still prefer to be charged on commission basis instead of advisory fee model. So I think both fee structure has their own merits. But if you ask me, we better design the fee structure according to the user preference. And currently the user preference is still commission based. They prefer to, for example, in mutual fund world, they still prefer to pay upfront subscription fee instead of ongoing annual advisory fee.
Helen, what do you see happening do you think this will change? Can the rise of wealth tech create a new dynamic?
Yeah, I think that's the things Kai just mentioned is all very interesting. It's basically enable more players, more service provider, and more options for the end users or for the customers. So this is a very good development here.
And Eric, you've mentioned some of the top tier players doing different things in wealth tech and digital assets. How confident are you that some of these new players or these new models or these new ways of structuring products together will provide a credible alternative to what, say, the banks are already doing?
I think the platforms or the platform providers, as I spoke about, is not to replace the banks, but it's actually to complement. Complement in a sense that, say, for example, instead of developing the product range of digitized securities, for example, right, which they don't have the infrastructure, they could partner with one of the digital license service providers out there. But what that means is that the information is provided to the bank or to the relationship managers or the private bankers to be able to digest and dig deeper how to value add more to their investors. So say, for example, all of us here, if we have an account with one of the digital securities exchange and we want to invest in the products and we get prompted, right, on the app, the first thing that I would do is to give a call to the RM that's being assigned and said, hey, I'd like to know more that's what's not on the platform, right, the data. And that's where it increases the value add of the RMs to actually upskill, perhaps not from the traditional KPI basis of pushing products, but more to like what Helen may say, or understanding the client, or I would say more of understanding the product dynamics vis-a-vis what's happening on a macro level, right? So I think it forces the traditional market to become more sophisticated to service the wealthy individuals. Yeah.
Right. So those RMs are more knowledgeable and can provide meaningful advice. Precisely.
Yes.
What is the moat that these fintechs can build, at least at an industry level? UBS and Morgan Stanley have vast resources. They're run by clever people. What's to stop them from simply building this capacity themselves?
I think if you look at, very good question. You look at UBS, and it's not just UBS. You have Citi that has Citi Ventures. You have Stanchart with SC Ventures. They have been amassing a lot of fintechs from the wealth, from digital bank, and they're basically plugging like a jigsaw puzzle, right? Mm-hmm. Bringing the best of what's out there into the bank, fusing the bank's infrastructure, the know-how, the distribution, right? The key thing is banks has a massive distribution that fintech firms may take, I don't know, about 5 years to build, right?
More than that, yeah.
So the banks has certain upside, which then obviously they may not have the time to actually build all this new tech area, and that's where they are collaborating with the private markets to bring the tech in, right? Yeah, so that's what I'm seeing about the likes of UBS that you mentioned.
Mm-hmm. Okay, great. So this has been very illuminating. Thank you, all three. I'd like to now sort of bring this back to why we're here in the first place, which is to talk about GBA, the Greater Bay Area. As everyone I think knows, we're looking at cross-border, cross-boundary opportunities between mainland China and Hong Kong, Macau. 3 currencies, 3 different regulatory regimes, 3 different markets with their own customs and habits. So when we think about these 3 things, platforms, products, and distribution, how are these going to be leveraged to make GBA work, whether that's for firms on the mainland side or firms on the Hong Kong side? And I think all of you will have something unique to bring to that. So Eric, I'll start with you since we started with you on the platform overlook. What do you think will be the way that, particularly from the platform perspective, what is the challenge and opportunity with GBA?
I think the opportunity is I'm a big believer of convergence, right? So when you mention about 3 territories or 3 regulators or regimes, it will be consolidated, right? It's just a matter of time. Second, then the challenge is for the fintech firms or even banks out there is how to position themselves when that conversion takes place. Think of it as in the current climate, you have the digital assets, the cryptocurrencies on one side, which is unregulated. You have digital securities on the other side, but underlying is blockchain, right? And I'm looking at, from a Singapore context, that it seems to be a convergence taking place. For example, I mentioned ADDX earlier again. They just issued a press release that they now can take in cryptos as a form of collateralization as a MES regulated securities firm, right? So that's something that it's very uniquely, refreshing, but yet they are doing it very carefully. But that's a form of convergence in a sense, right? So going back to GBA, convergence and the challenge is how to position yourselves when it happens.
On that last point there, I don't know if I don't think you'd be allowed to use crypto as a form of collateral in a mainland transaction, but CBDCs or some sort of regulated stablecoin or other digital liability could be the bridge that closes this. I don't know if you're seeing anything on that front.
Not yet, but that's a very interesting point to moot. Perhaps, if there's any regulator from China is looking at it, that could be something that, well, it's backed by the central bank. It's domestically recognized. So I think that could be one potential source of avenue for collateralization.
Okay, and then just on this platform product, Helen, anything you want to add to color in some of Eric's points?
No, I think Eric covered very well.
Okay, then we'll move on. I'll stay with you though, Helen. Let's think about distribution. Sure. What is distribution going to mean in the GBA context? How are people going to be able to get their products or strategies in the hands of investors on the other side?
Yeah, I think in a current moment, the pandemic, the travel and the quarantine requirements do, make these distributions of products a bit difficult. But this is, we see as something will be loosened in the longer term. But then, stepping back a bit, we see the global wealth creations over the past 2 decades, and then China is a very key driver. And hence we see a great demand for wealth management services and products. So as well as potential for service providers business. So this is no doubt. And for the very high saving rates at the China investor side, so to give a good options, investment options, putting the risk appetite or the needs of investors onshore in China is very important. So I think with the GBA Wealth Management Connect enabling eligible investors to invest offshore, and also for those interested to invest onshore, this is a very important channels. And then the question is how the wealth management service providers be able to play a role in this. Well, let's bring up to today's topic is really the digitalization is of the platform will help to overcome some of these medium-term or longer-term barriers and help to speed up the growth and the reach of these products to the investors.
Wealth Management Connect is brand new. Is it so new? Is it not that new enough that we can begin to draw some lessons about what works?
I think it's very new, still very new. It is. I see it's still in an initial stage.
When it comes to that digital, tools enabling us to cut through some of those challenges, Helen, what do you see as how? Let me put it this way: how ready do you think are firms in Hong Kong to be able to do business once they're allowed to in the way they want to? How ready are they in terms of their tech, in terms of their organization to handle that?
Yeah, I think as our fellow panel speakers share today, the different players in the market, whether they're traditional business models or the new technologies developed platforms, they're all very keen and finding ways to strengthen the in-house or partner with external fintech service providers, so to enable the digital capabilities and get prepared for these markets potential. So I think it's there, but the question is really how can they link up onshore? I think one of the example I want to share is the media promoting the services. So what's digital media available outside is like we have Instagram, we have Facebook, we have LinkedIn on B2B or B2C or B2B2C models. So what else we can do beyond like WeChat or Bilibili? So this is something we can think more about.
Have you seen anybody come up with an example that's kind of like a post WeChat way of reaching out to investors in mainland China?
Yeah, still looking forward to.
Still looking forward to it. Okay. All right. Well, let's ask then. Kai, you're the perfect person to ask. You are in the front lines. You are right in the trenches of this. What's the way that you guys are thinking about approaching clients, investors in mainland?
Yeah, I think in this section we focus on the topic of digital wealth, and I think digital wealth is definitely highly relevant to the GBA WealthConnect program. And I strongly believe that digital will be the primary and the best channel to provide wealth service across the border remotely, and is also the most cost-efficient way to serve a huge population in the GBA area. And we can also reach out to them very quickly and expand the market share very quickly. And I think as previously discussed in this section, I think in Hong Kong, probably we're going to see some very interesting digital wealth changes and enhancement in the next couple of years. And probably if you ask me, I would predict that actually we will provide more digital wealth advisory services and more value-added functionality to serve the customer throughout the entire investment journey. So you can imagine, obviously, currently the regulation doesn't allow any advisory service for the GBA program. It's only allow actually execution-only servers. But you can imagine when the regulation begin to relax, and by then actually we can easily export what we have already done in Hong Kong or in other parts of Asia with all these more advanced digital servers to the WealthConnect platform and try to serve all the population in the GBA area. And apparently some choice would be required to fit into mainland investor preference in terms of product offering, languages, and the way the advisory process actually is presented, etc., etc. But I strongly believe that those who can provide the best digital experience to customer would be the winner in the GBA program.
How ready are firms in the fintech world to provide that customer support?
I think we are still in the initial stage, not just WeLab, but I think the entire fintech world, and even the traditional banks, as we can see from the early results of the customer acquisition momentum, is a bit slow. But I think all of us are pretty optimistic and strongly believe that the program actually is a good one and provide lots of opportunities to everyone in Hong Kong as well as in the GBA area. And I think we're trying to figure out different things to make it a success, including choosing the right partners and then providing the right digital solutions, etc., etc.
How important is it to be on the ground in some way, shape, or form? We were talking about digital, so obviously sort of remote, maybe operating out of Hong Kong, but many banks, whether they're from Hong Kong or they're mainland institutions, obviously have a presence. Often brick and mortar presence in Guangdong. WeLab Bank's parent has a fintech business, several fintech businesses actually in Guangdong. So I don't know if you need to leverage that. How important is it going to be to have some kind of physical presence to be good at this?
Yeah, I think the physical presence in mainland China definitely is a big advantage. A huge distribution network and huge RM sales force definitely will help. But think about it, I think ultimately it is a Hong Kong entity, the Hong Kong banks actually who provide the service remotely to the mainland customer. So instead of we're not talking about the mainland entity or mainland banks serving the mainland customer, then that's not GBA. We're talking about Hong Kong banks serving mainland customer. So the only way, to be honest, is to do it remotely and digitally.
Okay. And final question to follow up on Helen's point about the social media and marketing to reach out to people. Is it all still about WeChat, or will there be alternative ways to reach retail investors at least? Kai, do you have a view on that?
Yeah, I think digital is very, very all-rounded. It's not just about mobile service, but we are talking about social media through different channels, and more interestingly, probably not just about channel, but also the way we present to the potential customer. For example, we can make it more trendy, make it more fun instead of make it so professional or traditional that, be honest, a lot of young investors find it so boring to use traditional services.
Okay, we're about out of time. Eric, last very quick question to you, sir. Since you're from Singapore, when you look at the potential for GBA business versus, say, cross-border opportunities in Southeast Asia or around Asia-Pac, on a level of 1 to 10, how excited?
I would say 9.
Okay.
The reason is because the not common saying, right? If you ask me what is there to invest in Japan, you know the big names. But the interesting part is we don't know actually a lot of things of a lot of investment opportunities in Hong Kong or even Guangzhou or even in the GBA area. So I think the cross-border interest, it works both ways. Investors from GBA would like to know what's there to invest in Southeast Asian markets, like Indonesia or Vietnam. And likewise, for me, I'm keen to know what's there to invest in Hong Kong or even in the GBA area. So I think, you can, open an account. Let's say if I go to Kai's bank and open one, but I still don't know, right? So I need to talk to, say, Kai or Helen. Hey, can you give me a rundown of what opportunities are there, right? So that human touch is just going back to the final touch point. A human touch element is still necessary, regardless whether how much we want to push tech into the picture. There's still a human element that we cannot forget. Yeah,
absolutely. Technology is a tool. It's not the business itself. Look, we are out of time. Thank you so much. I want to thank the audience for tuning in. I want to thank VFF for hosting the event and inviting all of us. And of course, give at your computer desk, please give a round of applause to Kai Mack from WeLab Bank, Helen Leung from Mercer Investments, and Eric Neo from RF International Holdings. For DigFin, I'm Jame DiBiasio, and I hope you all have a great day.